Wipro's Q2 FY23 press conference. A warm welcome also to those watching us on the live stream. Let me quickly introduce you to our management who will be addressing us. On stage, we have with us today Thierry Delaporte, our CEO and MD, Stephanie Trotman, our Chief Growth Officer, Jatin Dalal, our CFO, and Saurav Govil, our CHRO. With that, I will now ask Thierry to come up on stage and address the conference.
Thank you. All right. Good evening, everybody. Welcome to Wipro's Bangalore campus at our quarterly earnings press conference. And to those who are joining us virtually, thank you for dialing in. So since the last time we spoke in July, macroeconomic conditions across almost all markets and sectors have changed. In speaking to our clients every day, what do we hear? We are seeing a change in the level of optimism as business around the world are dealing with inflationary pressures, geopolitical turmoil, energy crisis, and rising interest rates. Almost every major economy is experiencing today economic deceleration. It's a fact. And it's against this backdrop that we delivered a strong quarter. Our business strategy is so strong and our value proposition continues to resonate with clients across markets. This is clearly reflected in robust bookings, healthy deal signings, growth in revenues, as well as operating margins. Let's start. Our bookings in total contract value terms, they grew 24% year on year in Q2. Two of the four markets, Americas 1 and Europe, grew more than 30% year on year. We've said in the past that, I'm sure you remember, large transformative deals are a key pillar of our growth strategy. They allow us to demonstrate the true power and the scale of our services, talent, and operations. Large deals are where we deliver maximum values for our clients. We know that. So I'm pretty pleased to say that large deal wins have continued to be really strong. In Q2, we signed 11 deals with a total contract value of $725 million. And this actually follows an exceptional quarter in Q1, if you remember, when we clocked over $1 billion in deal signing. This strong booking trajectory is clearly translating into a 42% year-on-year growth in our large deal bookings just for the first half of this fiscal year. Over the last few years, we have steadily increased our win rate and improved the quality of our pipeline. As of today, our pipeline, as I would say, a well-balanced mix of transformation, growth, and cost takeout engagements. Now, this mix may change in the coming quarters based on external conditions that I talked about earlier. But we expect continued strong demand for a comprehensive portfolio of services. We know that technology, in good times and in bad, has become the underlying success factor for any business. Regardless of what the problem is, increasingly, technology is the solution. And I believe we're better positioned than ever before to help our clients tap into the true power of technology, whether that's to drive growth and transformation or manage cost, or actually build a sustainable future. Speaking of sustainability, we continue to build sustainability into everything we do, including across our tech stack. You will see us leveraging our sector domain expertise and strong partnership to develop new low carbon impact solutions for our clients. Our enterprise scaling and sustainability process experience is helping us stand out in the market and leading to strong client demand. Overall, with our deep engineering expertise and comprehensive set of offerings, we are well positioned to be the partner of choice for our clients as they face a growing set of headwinds. Turning to our revenue growth now, we recorded 4.1% growth in constant currency terms sequentially and 13% on a year-on-year basis. That translates into double-digit growth across all markets. Business growth translates into growth for our colleagues. I'm happy to share that we rolled out quarterly promotions to our employees in July and salary increases effective September. And yet, we've achieved operating margins of 15.1%. As we continue to enhance our portfolio with the newer and more strategic service offerings, our clients are recognizing the value we deliver. This is increasingly reflected in our improved price realization as well. These efforts, combined with operational excellence, automation, and higher productivity, are the key levers for the margin improvements. And now, as always, I like to do that. I'll share some finer details on markets, service offerings, and sectors, right? So let's start. In Americas 1, we grew 15% year-on-year in the second quarter, with all sectors showing strong growth. During the quarter, the fastest growing sector in the market was technology products and platforms, which grew 26% year-on-year. Order booking in total contract value terms grew nearly 34% year-on-year in Q2. That's for Americas 1. Now, in Americas 2, we grew 12% year-on-year in Q2. Manufacturing, energy utilities, both led the performance, recording a growth of more than 20% each year-on-year. But financial services grew at 17% year-on-year as well. Now, shifting from America to Europe, our European business delivered a year-on-year growth of 12% in Q2. Most of the markets recorded strong double-digit growth, with Benelux, UK and Ireland, and South Europe leading the pack. Our order book in total contract value terms grew at 36% year-on-year. Finally, our APMEA, Asia Pacific, Middle East and Africa market, our business grew at 11% year-on-year in Q2. Regions that did particularly well during the quarter were Southeast Asia, Australia and New Zealand, and Middle East. Frankly, strengthening client relationship remains a top priority. As a result, we're gaining share in our metal accounts. You know, our metal accounts, our largest account, our top 5 clients grew 19% year-on-year. And top 10 clients grew 17% year-on-year, both in constant currency terms. Now, from a service offering standpoint, remember we have IDs and iCore global business lines. So let's start with IDs. Our IDs global business line grew 15% year-on-year in Q2. No surprise, this growth was led by cloud transformation, which grew 26% year-on-year, applications and data, which grew 21% year-on-year, and finally, engineering services, which grew 18% year-on-year. Now, on the iCore side, our iCore global business line grew 9% year-on-year in Q2. They are clearly led by cybersecurity services, which grew 23% year-on-year in Q2. As the speed of the transformation accelerates, we are definitely experiencing increased demand for our full suite of cyber offerings. We are leveraging internal methodologies, frameworks, intellectual property in collaboration with our technology partners to help our clients manage a dynamic and complex risk environment. In one recent example, we helped a global communications organization improve and automate their compliance processes, leading to an enhanced risk posture. We now operate and execute this program globally, and we have driven significant cost reduction in their security and compliance program. Now, talking about Wipro full-stride cloud services, which is more than a third of our pipeline today. It continues to be a driver of our success, and partnerships are at the center of this growth. In fact, in the second quarter, bookings with hyper-growth partners grew 24% year-on-year. Working alongside the partners, we are creating industry solutions and leading major transformation efforts designed to help clients unlock the value of cloud and realize new efficiencies. In addition to modernizing applications, we see a great amount of interest in modernizing data operations as organizations realize the power of data in gleaning new insights into their businesses. For example, for a US-based diversified financial services group, we are working on a digital transformation and data modelization effort, which involves building a next-generation cloud analytics platform. The goal is to deliver omnichannel experience that help our clients get better real-time insights into their business. And ultimately, the transformation is helping our clients reduce time to market for new capabilities and deliver enhanced experiences. Yeah, technical issue. Thank you, guys. In another example, let me give you another example. For a leading provider of industrial automation solutions, we are working on a transformation program that will help them become more client and relationship-centric. We are building a multi-cloud solution that will transform the firm's marketing, sales, and services around a single client definition, creating opportunities for more meaningful engagement with customers. We continue to double down on strategic investment in areas that we know will drive long-term competitive edge for us and our clients. For example, recently, we launched Lab 45, a new brand for our city organization. Lab 45 is a new direction for our technology research and development unit. It will develop new assets, intellectual property, and products through clients' collaboration and partnerships. Lab 45 will help our client build new businesses, model, enhance user experience, and drive growth through enterprise technology. In fact, the opportunity to tap into our expertise and world-class talent through Lab 45 is already factoring into client decisions and making an impact on how we win in the market. We are continuing also to expand our capabilities in strategic areas, such as artificial intelligence, and data, 5G, metaverse, IoT, Industry 4.0 to help clients gain new competitive edge. I now share a view of the talent landscape. We need to discuss about that. I'm happy to share that our attrition has continued to moderate for the third quarter in a row. In Q2, attrition was down to 23% on the trailing 12 months basis. And our quarter annualized numbers are trending even lower than that. We expect a further moderation in Q3. Like I had shared last quarter, we are now offering promotions to our employees every quarter. And in Q2, we promoted about 10,000 colleagues. I'm also pleased to share that the annual salary increases were given to our colleagues across bands in Q2, with a steep differentiation, as it should, in rewards for our top talent. We have also onboarded over 14,000 freshers in H1, which is over 72% of what we added in the whole of last year. And finally, I will share an outlook for the next quarter. We've guided for revenue growth of 0.5% to 2%, which will translate into growth of 10 to 12% year on year in constant currency terms. This guidance reflects the current environment and the quarter seasonality. For the full year, we are certain that we will report double-digit growth. Our margin in Q3 will have some headwinds. There's the impact of 2 incremental months of salary increases, and yet we expect to hold our margin in a narrow band. In summary, we have delivered a strong performance against the backdrop of what I would call a mixed macroeconomic environment. Our order bookings and the large deals reflect an improved market competitiveness and frankly prove that our strategy is working. We're experiencing a real shift in the market as clients increasingly turns to us to realize their boldest ambitions. Based on all these factors, we remain confident of gaining market share in the coming quarters. Now, I'll hand it over to you, Jatin.
Thank you, Thierry.
Comments. Thank you.
So we had a strong quarter. We had 4.1% sequential growth and 12.9% year-on-year growth. Our operating margin was 15.1%. We mentioned we will hold and improve margins, and we have given a small improvement. Our ETR was 22.5%, which was an improvement of more than 1 percentage point compared to the previous quarter. Our net income grew 3.7% sequentially, and which I think was a healthy growth. Our cash flows came very strongly. Operating cash flow to net income was 181%, as a result of which we had $4.3 billion of cash at the end of the quarter on gross basis, and net of that it was $2.2 billion. Overall, Forex was a good movement during the course of the quarter. We had a realization of 79.93, and we had at the end of the quarter hedges worth $3.8 billion. So overall, a very strong quarter. We have guided, as Thierry mentioned, 0.5 to 2% sequential growth in the currencies that we have mentioned in our press release. Thank you, and we'll be happy to take your questions.
Please introduce yourself and go ahead and ask a question.
Hi, my name is Ritu. I'm from CNBC TV 18. We saw you outline the environment, which we understand is difficult right now. But your guidance, 0.5 to 2% that you've given, is seen as certainly modest compared to what the expectations were, perhaps closer to 1 to 3%. So a sense on that, if you could give us. Secondly, your margin breakup, 15.1%, the gains, where they came from, and your medium-term guidance of 17 to 17.5%. What is the sort of trajectory towards getting there? A word on the third quarter, what you're expecting in terms terms of furloughs as well, given what is going around? And lastly, if I may add, a word on your hiring as well. I know you said attrition has been moderating quarter on quarter for the past 3 quarters, but your hiring, about 600 for the quarter, we understand, is slightly lower than what we've seen in the past few quarters. Is that because you'd already anticipated the demand and hired, or do you see weaker demand going ahead? Thank you.
Okay, so I'll because turned off. Can you hear me? Okay, all right, okay. So thanks for the question. I'll try to remember all the points, okay? So the first one is about the growth outlook, okay? We try to keep a balanced view as to what we are seeing. On one hand, we have great performance in bookings. I mean, we have delivered outstanding performance in Q1, outstanding in Q2. I mentioned the percentage of growth, over 40% on the larger deals. So outstanding growth. And what we are seeing for Q3 is very promising as well. On the other hand, we are talking to clients every day. And what I'm hearing from clients is that, everything we know, that, there is a certain level of uncertainty. And so as we are looking at it and reflecting, and as we are looking at Q3, we reflect on this level of uncertainty. And that's probably, you might feel that we are slightly cautious. And we'll see. But I think, we are acknowledging the fact that we are in a time of more uncertainty, that the market has changed compared to a year ago. So that's the first point for the growth outlook. Having said that, we still shoot for double-digit growth, which is what we've said. So it's not changing our growth trajectory. Point on furlough, you ask about it. Yes, traditionally, Q3 is the quarter where furlough happens. And yes, we are seeing that there are furloughs indeed. And we are taking every situation one by one with clients. So here again, it's slightly difficult to really say, it's not necessarily worse than other years, but we just need to see how we can, and we will handle it over the next months with our clients. So that's for that. For the margins, a quarter ago, we communicated that 15% was our bottom, right? That we considered it as the bottom, and we knew that it would take a couple of quarters before we can start to improve the margin. We've delivered 15.1%. I think we follow this same line. We'll consider that this is, our level. We'll trend from there, but you should not expect major change from that point in quarter 3. So what we've done, okay, yeah. So what we've done, remember, in Q1, we had done an exceptionally high volume of hiring, okay? And we had said in the communications that, to you, that we did that because we had a huge amount of demand, but we knew that it would take a couple of weeks before we are, getting all these talents utilized. And that's what we've done throughout the quarter 2. Also, during the quarter 2, we've really, following our strategy, focused on hiring freshers. And we've onboarded, several thousands of new freshers, and we continue this strategy as well. So I think it is, we'll continue to follow this strategy over the next quarters. Again, we certainly have in mind that there is a certain level of uncertainty that I was talking about, okay? But at the same time, we have a great demand. Our demand doesn't go down. So that is the context where we are right now. Who's next?
Congratulations all. My name is Tushar. I'm from Financial Express. I want to understand from you your 5G play, right? I mean, you did have a passing mention of it, but I want to understand how you're leveraging that opportunity. And are you in talks with clients? Are you buying the spectrum from governments? What is the talk, and what is the revenue opportunity you have from there, please? Thank you.
You know, it's obviously 5G is a massive area. You know, it is a significant investment for some of our clients or for partners of our clients. Okay, there's billions of dollars injected in 5G, which will transform the way we are dealing with data. You know, over the next years, we have been early investors into this area, you know, working with our clients, developing specific solutions, and helping them also define their own strategy. Take an area where 5G has already a lot of applications is around the world of digital manufacturing. Right? The ability to leverage the speed, accelerate the speed of data and volume of data in the manufacturing world will transform the way manufacturers are driving time to market for their products. So we are investing in these areas. We are looking at potential acquisitions as well as we go, and we'll continue to certainly also. We've also really developed, we've built a unit, we have developed capabilities, we are hiring talent. It's one of our hot markets at the moment.
Are you in talks with the government for a spectrum?
Say again?
Are you in talks with the government for a spectrum, 5G spectrum?
No.
All right, thank you.
Hi, good evening. This is Haripriya from Money Control. You spoke about macro uncertainties in your opening speech. I wanted to understand, are you seeing any change? I mean, in our clients' experience, talking about caution, is there like a change in tone? Are you seeing any delays or deferrals in projects, mega deals drying up? Anything on that front, if you could give us some color. Also, I wanted to understand, because of margins, variable payouts were cut last quarter. What does that scenario look like for Wipro this time? And headcount addition, you obviously spoke about, how freshers have obviously 14,000 in the first half, but there have also been a lot of complaints about why onboarding's been delayed. Can you give us some color on that, please?
Yeah.
Thanks.
So again, coming back to the market, you are reading the newspapers, right? You see what's going on in Ukraine. You see the oil crisis. You see the slowdown in America and in most of the economies. You see the interest, right? Inflation and so on. It's a reality. And I am speaking to clients every day. And I know Stephanie does too. So we are reading our clients, and I think our job is to listen to them because they are telling us, what's happening. Today, they're not saying we cut spending on technology. They're not saying that. They're saying we don't know. There is a level of uncertainty. And I feel it's our responsibility to be honest about that. I think there is indeed a certain level of uncertainty. As most of the time a war drives uncertainty, right? This is pretty much what's happening. So are we seeing a slowdown in demand? Again, I don't think so. Our pipeline is not lower. And, the projection of bookings for the coming quarter are actually strong. Is there a slowdown in decision process? It's difficult to qualify. Are we seeing it sometimes? Yes. I take an example. I believe technology companies, large technology companies, are slowing down. And I think it's a reality. So we see that in some pockets. Is it widely spread? Too early to tell, honestly. So we stay vigilant. Hence, maybe this caution. But that's, I believe, important to stay very close to the market to understand it. You want to take the question, Saurabh? Huh? Oh, yeah. So You ask about variable pay? Okay, variable pay. So every quarter, depending on performance, variable pay are better or lower, right? I can tell you this quarter, I believe 85% of our employees will get 100%. Hiring, I just want to respond to you, and to some articles I've read. We will honor every hiring offer that we've submitted. This is us.
Hi, this is Sai Ishwar from the Economic Times. So I just wanted to know on the deal front, the large deal number has fallen down. So how should we read into this? Are companies breaking up the large deals and giving it into a smaller deals? And also the nature of deals. Are we seeing more of cost-cutting kind of deals because of the environment?
Okay.
And one more question on, there's a lot of buzz around moonlighting, right? So there are also reports saying that around 300 people were fired. So can you give more color to that? Have you brought in more protocols, more safeguard procedures to prevent such events?
Okay, so I'll start on your first question, then I'll ask Stephanie to continue, and then I'll come back on the moonlighting. And you can add something if you want, okay? But I like to cover those 2 points. So the large deals, it's actually, it's not going down. It's just that, in Q1 it was even higher. But we actually have more large deals in our pipeline than ever before, okay? Turns out, this is the reality of bookings. From one quarter to another, you might, depending on one deal or two, sometimes you have an up and down. But the reality is that you should look at the performance on large deals in the first 2 quarters versus previous, plus 43%. That's outstanding. So we have more large deals than before. Are they sometimes chucking pieces? Yes. We've always said that. Sometimes it happens, sometimes it doesn't, okay? But I'm actually quite confident on our ability to continue to win large deals. You want to? On the nature of deals that you ask as well, yeah.
In terms of our strategy around large deals, it's working. So we implemented it when I joined.
It's not working.
A year and a half ago. So our strategy around large deals is working. Our teams are in place and they're executing in the market and working closely and co-creating with our clients. The other thing that is important to note is the quality of the large deals that we're doing. While certainly there are large deals where clients are looking for vendor consolidation and cost takeout and streamlining, a lot of the large deals that we signed this quarter were really transformational deals where we could really bring all of Wipro together to deliver an outcome to our clients. So I'm really pleased not only with the performance that we've had and the performance I project we'll have this year, but also in the quality and the mix of the kinds of deals that we're doing. So very, very bullish about our strategy there.
On moonlighting. So, we have a pretty clear position at Wipro that, we are taking pride of the fact that we're keeping commitment with our employee and expect the same. There are contracts. Contracts have to be respected. In particular, when people are, going for another job that has a conflict of interest with Wipro. How can we accept that, frankly? So, yes, we don't accept that.
Hi. Hi, this is Narayankar from United News of India. Taking further that on moonlighting. See, look, there is a divided opinion on this issue. For example, Zomato and, if I'm right, and some other companies are okay with it. So there is a thought process in those companies that moonlighting is not illegal and free of security issues. So also, not only that, the legal experts are of the opinion that moonlighting related issues cannot withstand the court of law in the country. So I would like to, have a very general question. It is a big debate going on. So I frankly expect a detailed answer from.
I'll do my best. Okay. So look, I completely respect what other companies are doing. At Wipro, again, there are contracts where we expect our employees to not only dedicate time to Wipro, but also keep time for themselves and for families. We're perfectly fine with someone having, a little side job here and there. It's different if you're working for, a company that is in our environment, for example. So it's not a question of legal, it's a question of ethic. We don't believe that it's right to have two jobs having a conflict of interest. Now, if other companies have no problem with that, respect that. But also, we are not doing anything new or different. It's clear to our people when joining Wipro. Oh, I hope it was clear.
No, anyway.
You may not like it, but it's our
anyway, see, you're talking about ethics. It's a very subjective matter. Anyways, I have one more question.
May I say one thing?
Yeah.
Because you say it's. When I talk about ethics, I talk about conflict of interest. So if you allow me, I'll reflect on what it means. Conflict of interest means being in a position where you no longer know if if your interests are not, mixed. And that's an important point. So hear me, I'm not talking about things illegal. I'm not talking about, side jobs. I'm really talking about, being in an obvious situation of conflict of interest. And I think that our employees understand that.
I think we should leave this to the courts to decide. Anyway, you said about Ukraine issue and America's economy, on the downslide. But you can always tap the Russian market, which is very, very huge market.
Sure. I'm not discussing this, but we don't have business in Russia.
So we have a few questions which have come in online, and this one is for Jatin. Can you please break up the improvement seen in margin, and do you see this momentum going ahead?
Yeah, sure. So the first, let me break down the margins of Q2. We had three positive levers at play, which was first was we had an improvement in SG&A by about 0.3 percentage points. Second was operational improvement, which is really better productivity in our fixed price projects and overall strong execution of optimization of our costs. We got about 0.4 percentage. That takes 0.3 plus 0.4, 0.7. Then we got about 0.3% upside on Forex. That took a total of positives to about 1 percentage point. And 0.9% was really our investment back into business in form of 1 month salary increase and promotions that we gave from 1st of July. So that brings a net number of 0.1. So that's the movement from 15 to 15.1.
Okay, good evening. Moma Kanan from the New Indian Express here. So how your acquired companies perform during the quarter, considering the recession fears? Can you just be specific on acquired companies?
Okay, so, I will respond, but just want to say one thing. When we are doing an acquisition, we are very much focusing on driving synergies, okay? So, it becomes not necessarily easy to look at the performance as such because, it's all the different opportunities that, the acquired company plus Wipro can drive together that really justify the acquisition. Having said that, they perform pretty well. We see a slowdown from the consulting business. No surprise. I think we all know that. It's early cycle. By the way, it will be early cycle for the rebound as well. So that's a reality. overall the performance of our acquired entity is above plans everywhere.
So one more, what is the percentage of workforce that is back to office now? Because I think recently you said October 10th, senior, should report to office.
So we have just started that as of Monday. So it's just been 2 days. So you have to give us some time. But very clearly, the intent is to get people get more connected, come to office. So all our offices, especially in India, are open 4 days a week. And we expect people leadership to be here 3 days a week. We're also giving them the flexibility, but we also want connectivity. It's a very truly a hybrid model in terms of how we want to take it forward. Let's see how it evolves over a period of time.
So, sort of connected to that is another question from Rishabh Shaw, Informist Media. He asks, how have you managed to rein in travel costs despite bringing in employees to work from office?
Travel, I think operationally, Jatin has spoken about it. We are looking at every cost, and pandemic has given us the learning, but it's a function of being virtual, coming over. So that's the way to look at it. But overall costs have, and we'll continue to maintain it. In fact, I'll be honest, theory is pushing it that from a carbon footprint perspective also, with a long-term sustainability perspective, we cannot go back to what the pre-pandemic days are. So theory, over to you.
We try to be conscious, about travel. So I just want to take this point. We try to be conscious of what makes sense. It's important to travel, and sometimes our people need to travel, whether it's to meet teams or it's to meet clients or partners, and they do. When it's not necessary, when there's a lot of things that can be done remotely, we do it remotely. So it's just applying maybe more judgment and more responsibility on every people to really decide when it makes sense to travel. At the end of the day, I would say, obviously our cost of travel have gone up versus, the time of the COVID. But it's less than what it was before the COVID. So I think it's reflecting the evolution of our world.
Hi, this is Haripriya from Business Line. So I just had a follow-up question on, you mentioned about demand environment. So speaking sector-wise, what is it true across sectors, or are you seeing a slowdown or some sort of cautiousness in specific sectors like BFSI? And a question on the attrition, you have managed to get to moderation. So what is it that you're doing right? What is it that what's the play that's working for you?
Yeah. So industry-wise, if you look at me, you will see the growth from our sectors. Pretty much most of our sectors are growing very well. Okay. I believe that some sectors are possibly more exposed to inflation or decelerations that are seen in some regions. You could imagine that the retail sector will be a little more exposed. We already see that the technology companies that have been growing tremendously are slowing down. It's a fact. Your second point on attrition, I'll let Saurabh talk about what we are doing well. But I think, we have seen a steady reduction of our attrition quarter after quarter. I think, I should not steal it from you, but I believe that step by step, we've learned about how to adjust to a new world where some people are working from home and some are working at the office. I think we've really done a good job to connect more, to really engage more, to get more, the sense of, being part of a group, which, was that feeling when, we had our employees all gathering at the campus every day. And so I think that is being certainly driving a certain stabilization of the attrition and then a reduction. So, Rob, you want?
Only one more thing is that our focus, as Thierry alluded to, on freshers, how we have onboarded them, engaged them, and showed them a career path for the next 5 years, both from a career and financial standpoint, has also helped us in looking at this. And we had called it out. So it's 3 quarters in a row for us, a moderation. And what we see in Q3 will be a further moderation and contraction of attrition.
So next question is from Ayushman from Financial Express. He asks, profits on a year-on-year basis is down 9%. Why? And his second question is, do you see cut in discretionary spending?
So you want to take the first one, or you want me to take it?
So it is simply reflection of some of the changes in the operating margin line that we have seen that is reflected in partially in the net income line. But more importantly, I want to talk about the fact that on a first half basis, we had a much higher benefit, one-time credit on tax, which we had in Q1 of FY22, which is not there this year. And that is also impacting the first half performance of net income.
If I can add one thing on this evolution of the operating margin, keep in mind that in the last 9 quarters, we've grown 40% as a company in a hot market, where we know that salaries were there was high demand and attrition and so on. So I think it's a reality. Your second point was
Discretionary spend.
Discretionary spend. I've heard several clients telling me, because we don't know exactly what will be the outlook for 23, calendar year 23, we will do 2 budgets, one more cautious than the other. I think we should stay close. It's too early to tell, frankly. For now, all I can say is that we possibly see more in our pipeline, more deals that have a focus on productivity, on cost rationalization, and so on. Vendor consolidation, cost rationalization, and so on. We possibly see that more than we would have seen it a year ago. That's what I can tell.
We have time for one last question.
Yes, I just want to follow up from one of the previous questions. For you, Saurav, you did mention that about the moonlighting stuff, but I want to understand from you, how are you monitoring it, and have you put in place certain policies to rein in and just weave that out?
As Thierry said, we have nothing new. It's a contract which is there. We are just saying people who have a conflict with the contract which they have with Wipro, we will take action. So that's what it is. There's nothing new we are doing.
That's very important. There's nothing new. There are, some newspapers have taken it, but there's nothing new.
We'll take one last question.
One last.
So Shilpa from Times of India. You spoke about change in the level of optimism. Is it? Are you anticipating elongated, decision making and deal closures? Also, as much as the TCV looks robust, but the actual contract value is looking to be a challenge.
No. No.
And secondly, are there any concerns around pricing discounts at this point in time?
Well, okay, all right. So, classic. As a final question, I get 4 questions. Okay. So, the first one, I believe I answered it. It's really, so on the TCV and ACV, TCV is strong, ACV is strong. We are not seeing a slowdown of our bookings. We have seen an increase, a radical increase of our bookings in the last quarters, okay? The nature of deals is possibly shifting, or as an evolution. Although, as I said in my speech, bookings around cloud, security, data, engineering, more than ever. That's where we get most of our growth. And we knew that, What else? Other questions?
No, on the pricing discounts, are there
Pricing
concerns
discount.
around that?
So put the furlough discussion, because we had pricing. Actually, we've been able to discuss, price increase with a relatively significant amount of clients. If we look at, price increase, it's gone up versus, the previous quarters. Will it continue? We don't know.
One last question to Mr. Govill. You spoke about 10,000 promotions. Do you think it's sustainable? understanding what is happening in the tech world. There are layoffs in the big tech companies. Is it sustainable, especially when margins would be under pressure and we are heading into a season of furloughs and a lot of uncertainties around it?
Absolutely sustainable. You know, it is about growing our own people and making sure that we are able to deploy them on bigger and better roles in our projects and hire less laterally. So I think that's so have freshers coming in, growing them in the business is the way to look at it. So very sustainable, thought through.
We've completely run out of time. Thank you so much for attending the press conference.
Thank you. Thank you, everyone.